In today's show, I'll be breaking down the latest Bitcoin technical analysis as we just recaptured 69 G's, baby, and we're pumping and in the green. We'll also be discussing the Bitcoin RSI copying the 2017 bull run, as trader says 75,000 key for the Bitcoin price. Also breaking news, Kenya signs a deal with Bitcoin miner Marathon Digital to monetize underused energy across the country by mining. Let's go. We'll also be discussing Bitcoin and Ether options worth $2.7 billion are set to expire on May 31st and how this is likely to impact the crypto market. We'll also be discussing breaking news. Spot Ethereum e-test received the official approval from the SEC. However, Gary Gensler didn't vote for these ETFs. I'll be explaining why. We'll also be discussing SEC's ETF decision means that Ethereum and a lot of other tokens are not securities. We'll also be discussing BitMEX's Arthur Hayes predicts what will likely propel the king crypto, Bitcoin, to $1 million per coin. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. If you're new to the live stream, very important to smash those likes, subscribe, repost, spread the word, do anything you can to help get the word out that we're live right now on 5 platforms: YouTube, Rumble, X, Twitch, and Kick. And with that being shared, today is pod episode number 1649. I'm your host, JV, and it's May 24th. 2024. A lot to share in the markets with you today. So let's get right into it with our market watch, as we do each and every day. You should be able to see on your screen, we got Bitcoin up over 3% on the day, trading back above $69,000. Also Ether, we did get the ETFs approved officially yesterday during the live stream. I'll be sharing the latest updates with you on that a little later. We can see Ether pumping above $3,700. Virtually everything in the green right now, except Solana. And checking out coinmarketcap.com, we're sitting at a 2.56 trillion market cap with 121 billion worth of volume for the past 24 hours. Bitcoin dominance is 53.2%, with the Ether dominance at 17.6%. And checking out the top 100 crypto gainers for the past 24 hours, we got Ondo up 20%, Core up 19 or almost 20%, and Uniswap up 19%. Below that, Lido DAO, Chainlink, and Axie Infinity. Now, which altcoins are you most bullish on for this bull run? Holla at your boy. And checking out the crypto bubbles to get a visual perspective on the day. Virtually everything in the green, which we love to see. And zooming out on the monthly, the majority are in the red, and correcting, with the biggest gainers being the meme coins. And checking out the crypto greed and fear index, today we're rated as 74 greed, yesterday 76 extreme greed, last week a 74, and last month a 72 in greed. So there you have it. Crypto La Familia. Let's keep it moving. Let's dive into today's Bitcoin technical analysis. Check out the charts where the Bitcoin price action is likely to go next. Headline reads, Bitcoin RSI copies 2017 bull run, as trader says 75,000 is the key for the Bitcoin price. That's right. Trader Jelly we're talking about. He says Bitcoin's quietly copying a key feature from the 2016 bull market, which kicks in at 75,000. Bitcoin analysis often points to similarities between the current bull cycle and those that have gone previously, notably the two most recent, which was 2016 and 2020. And while 2024 has differentiated itself in producing a new all-time high before, not after, the block subsidy halving, which is for the first time in Bitcoin history, there's still plenty of data suggesting the Bitcoin's steepest gains are still ahead. That's right. The RSI captures the extent to which an asset is overbought or oversold at any given level. Specifically on these weekly timeframes, Bitcoin is painting an exciting picture. Quoting the analyst, Bitcoin is playing out incredibly similar to early 2017. And the chart compared Bitcoin's performance on the way to its 2017 peak of 20,000 to its journey from January 2023 to now. Now, shout out Grant Noakes. He just hooked up the fam with 5 more memberships of the MicroStrategy to the channel here. So shout out to Jason Jimenez, Frank Roca, Johnny Thompson, Mr. Newton, Bitcoin Cowboy, you've all been hooked up and blessed with the MicroStrategy membership of the channel on behalf of Grant Noakes. We greatly appreciate that, Grant. That's very kind of you. Back to our TA. Even as years ago, the RSI is declining while the price is accelerating towards the previous highs. He also says a hidden bullish divergence and choppy waters right around the previous all-time highs before the main breakout. Clear 75,000, and this accelerates quite quickly. Now, historically, Bitcoin tends to put in the most strident upside when the RSI is in the overbought zone above 70. Such readings can endure for a considerable length of time before the price rally becomes unsustainable. That's right. So there's room for a return to 60,000. I personally don't think that is the most likely scenario, but let's entertain it according to some of the analysts here, such as Mikhail Van de Popp. He says still range bound. Bitcoin is fielding calls for a return to 60,000 or even lower. He says Bitcoin is consolidating and it's within the range. And he also wrote probably that consolidation will be taking place for a longer period. And I suspect we may see 61 to 63,000 even. Let me know your thoughts on that. And breaking news just in, that's pretty big. Kenya, let's go. They just signed a deal with Bitcoin miner Marathon Digital to monetize underused energy across the country by mining. So now we have a partnership between Kenya and Marathon Digital to be mining in Kenya. We also have Russia recently partnered with Ethiopia to create a Bitcoin mining hub. So a lot of bullishness for the miners and those stacking the biddies, because you already know it's the highest best use case of energy, hands down, and will continue to dominate as it always has. But let's keep it moving. We still got a lot to share. Our next story of the day, let's discuss some Bitcoin and Ether options, which are set to expire. 2.7 billion as of May 31st. That's right. Approximately 2.7 billion in Bitcoin and Ether options are set to expire May 24th, providing valuable insights into the crypto market sentiment. According to a recent post, it shared 21,000 Bitcoin options are set to expire. This indicates a near even balance between buyers and sellers with slight tilt towards the call options. Meanwhile, the maximum pain point, which is the price at which most option buyers would suffer losses, is 67,000, representing a nominal value of 1.4 billion. So while the upcoming 21,000 contract expiry is notable, it pales in comparison to the significantly larger event on May 31st, when a staggering 4.3 billion worth of options are set to expire, according to Deribit. Deribit data reveals that the long positions are predominantly in control when it comes to open interest, with a substantial 830 million tied to the 70,000 strike price. Moreover, the higher strike price also boosts significant open interest, notably 843 million at the 100,000 mark, indicating a bullish inclination amongst traders. With 388 million in open interest, the 60,000 strike price stands out as the most notable for put contracts. This substantial open interest indicates that many contracts remain unsettled, revealing the bulls are confident of much higher Bitcoin prices, as open interest represents the unresolved value of contracts waiting to be settled. And my question for the fam, how many of you are actually trading options, whether it's Bitcoin or Ether or whatever in crypto? I'm curious. Let me know. The options expiry event is not limited to Bitcoin, with a significant 350,000 Ether contracts also set to expire, representing a notional value of $1.3 billion. And according to the report from Greeks Live, Ethereum recently took the lead in the crypto rally, inspired by the ETF progress, with a one-day rise of 20%, which I think we saw about 4 days ago, family. The short-term options implied volatility reached 150% at one point, significantly higher than Bitcoin's current for the same period. So there you have it. Now, with the divergence between Bitcoin and Ether is now evident, Ethereum's bullish sentiment remains strong, maintaining high levels for each major term, challenging from the perspective of overall market trading and market structure. So there you have it, crypto fam. Our next story of the day, let's discuss these Ether ETFs. This is pretty big news. They officially went live yesterday, the same day. They got approved. The headline reads, Spot Ether ETFs received the official approval from the SEC. So yeah, in the second landmark decision this year, the US SEC has given the regulatory green light to spot Ether ETFs in the United States. That's right. May 23rd's filing, the SEC approved the 19B4 filings from Van Eck In fact, the Van Eck commercial went live within minutes after the approval, which is kind of crazy. My brother called me, yo, Van Eck, Ethereum ETF? Did the Ethereum ETF get the approval? I'm like, yep, that was pretty quick. But anyways, BlackRock also, Fidelity, Grayscale, Franklin Templeton, ARK21, Invesco, and Bitwise approving the rule changes, allowing spot Ether ETFs to be listed and traded on their respective exchanges. The landmark decision came despite speculation that the securities regulator has been investigating whether to label Ether as a security. So while the 19 B4s have been approved, ETH issuers still need the SEC to sign off on their respective S1 registration statements for the spot Ether ETFs to officially begin trading. Industry analysts say this could take days, weeks, or even months. The SEC reportedly instructed applicants to accelerate their 19 B4 filings on May 20th. The removal of staking is the most notable amendment seen across several filings. Now, lo and behold, that was the same day Ether rose 20% because all the insiders knew we were going to get the approval once they made those changes. The SEC did not announce approval of Hashdex's spot Ether ETF app. The asset manager's investment vehicle had a final deadline with the commission set for May 30th, end of the month, and ahead of Grayscale, Invesco, BlackRock, and Fidelity. It is unclear whether the SEC will ultimately approve the Hashdex ETF. The SEC approval comes days after the U.S. House of Representatives members voted in favor of legislation many believe will provide more regulatory clarity to the crypto industry. The Financial Innovation and Technology for the 21st Century Act will clarify the roles of the SEC and the CFTC, but it is still needing to be passed by the Senate to be signed into law. The spot Ether ETF approval comes 4.5 months after the SEC approved several spot Bitcoin ETF apps on January, marking an industry first. And according to data from Cointelegraph, the price of Ether rose to more than $3,900 immediately following that SEC announcement, then dropped to $3,700 at the time of this article being published. So there you have it. But all right, fam, next story of the day. We broke down the big news with the Ether ETFs getting the approval. And now, did you know that Gensler did not vote for them? I'm not surprised, mofos, in the name of Nate Diaz there. The U.S. SEC approved spot Ether ETFs on May 23rd, which we know yesterday, right? Unlike the spot Bitcoin ETFs approved via voting by 5-member committee, including the SEC Chair Gensler, the spot Ether ETFs were approved by the Trading and Markets Division of the SEC. That's right. The SEC approved the 19 B4 filings from BlackRock, Fidelity, Grayscale, Bitwise, Van Eck, and ARK, and Invesco, Franklin Templeton, but declined to comment beyond the official decision. Here's what they read. For the commission, by the Division of Trading and Markets, pursuant to the delegated authority. While many in the crypto community were curious about the difference in the approval process for the two crypto ETFs, Bloomberg ETF analyst James Seyfarth said this was normal. He said things are typically done in the same way for many approvals. And if the SEC required an official vote for every decision or every document, it'd be insane. It would have been nice to see where the political lines were drawn. However, not everyone seems to be convinced by Seyfarth's analysis. One user highlighted that a commissioner could challenge the decision within the next 10 days. And the main reason for the delegated authority was to hide the votes, as they might be seen as political. Another user attributed the SEC's decision to several factors, including political pressure, the upcoming elections, and the implementation of environmental, social, and governance rules. Another major difference between the approval processes of the two crypto ETFs is that all 11 Bitcoin ETFs started trading the day after their approval. Also, they got the S1 from clearance. Now, spot Ether ETFs may be weeks or months away from debuting on the exchanges, as the ETF filers have yet to receive the S1 SEC registration. Let me know if you're surprised that Gensler did not vote towards approving the ETFs. I'm not surprised one iota. And considering we're sitting at $69,000 right now, you already know.
60 G's, baby! It's red panty night when you sign to fight me, yeah? Back at home with your wife.
It's a celebration.
It's a celebration. People are always saying about the talk, and I talk, but
guess what? Bitcoin backs it up, though. It backs it up, though. Yes, and regarding Gensler not approving and not being the one to give the nod for the ETF for Ether,
you just shook up the world. How's that feel? Hey, I'm not surprised, mother.
Just saying, yo. Just saying. They not like us. But let's move on. We still got a lot to share. We discussed Ether ETFs. We discussed Gensler wasn't behind the approval. Now let's discuss headline. SEC's ETF decision means ETH and a lot of the other tokens are not securities. That's right. The approval of the spot Ether ETF is implicit recognition from the US SEC that Ether is not a security, according to industry pundits. One even suggests this could extend to other tokens as well. Quoting Ryan Sean Adams from the Bankless podcast, he says, these are commodity-based trust shares. So the SEC, by approving these, is explicitly saying they're not going to go after Ethereum as a security. And then we have digital asset lawyer Justin Browder believes that if Ether ETFs get the S1 approval, the final piece needed for them to start trading, then the debate is over. Ethereum is not a security. Then we have Adam Cochran, partner of venture capital firm Cinnamine Ventures, went on one step further, arguing that this approach could extend into other project tokens. He said, ETH is a commodity, even with its current attributes. That means we can extrapolate a lot of the other projects what elements matter in security. Today, a lot of things probably clearly become commodities, even if they don't know it yet. That's right. However, Safeart and others believe the SEC can continue to pursue actors involved in staking Ether. Quoting them here, I think they will try thread this needle and say ETH itself, they are not going to call it security, but staked ETH might be a security. And I don't believe they're going to give up on that anytime soon. Let me know if you agree with Safeart. Now, another lawyer agrees. He says the SEC could pursue individual actors and staking as a service, even with the ETF launched. I think other actions are less likely. In April, Ethereum infrastructure firm Consensus received the Wells notice from the SEC, which was primarily focused on MetaMask's trading and staking services. Now, you already know the ETH Foundation and Consensus are all intertwined there. Financial lawyer Scott Johnson also noted the SEC didn't confirm Ether's non-security status in its approval order, saying it completely sidestepped the issue. However, the SEC and some of its commissioners are expected to make an official statement in due course. I'm not holding my breath. The SEC officially approved 19 B4 apps, as we mentioned earlier, from BlackRock, Fidelity, Grayscale, Franklin, ARK, Invesco, as well as Bitwise. Hashdex was the only one that didn't receive the regulatory approval. However, it may soon receive it. So there you have it. Crypto fam. Now for our feature story of the day. Let's discuss BitMEX's Arthur Hayes predicts what will likely propel the king crypto Bitcoin to $1 million per coin. Let's break this baby down, shall we? Here we go. In a bold forecast that captures the interesting intersection of global economic policy and the crypto markets, we have Arthur Hayes just blaze, the former CEO of BitMEX and the current chief investment officer of Maelstrom. He has predicted that geopolitical maneuvers to stabilize the exchange rate between the US dollar and the Japanese yen could catapult the Bitcoin price to an unprecedented 1 million per coin. Hayes Insights details in his latest newsletter, the easy button highlights a potential future where Bitcoin's value skyrockets due to the fiat currency debasement driven by international monetary interventions. That's right, family. The easy button. Let's go. The core of Hayes' argument centers at the exchange rate dynamics between the US dollar and Japanese yen, which he labels the most important global economic variable. The yen has experienced significant weakening, which Hayes believes will inevitably force the US Federal Reserve to intervene. He predicts that the Fed will opt for the easy route by printing dollars to swap for the yen, a move designed to prevent further devaluation of the yen and to stabilize the foreign exchange market. The effects of such an intervention are vast. Hayes posits that a 2-week yen will trigger a chain reaction. China will devalue the yuan to maintain its export competitiveness. That's the Chinese yuan we're talking about here, also referred to as the renminbi over in China. That's what we used to call it. This devaluation would place immense pressure on the U.S. industrial sector, potentially accelerating the offshoring of manufacturing jobs and increasing the trade deficit. Now, Hayes' analysis hinges on the central bank's responses to these pressures. He argues that the Fed's likely decision to print and exchange dollars for yen will significantly increase the money supply. This move would allow the Bank of Japan to use these newly acquired dollars to intervene in the foreign exchange market while enabling China to expand its monetary base without destabilizing its economy. And according to Hayes, the consequence of this coordinated monetary expansion would be the debasement of the US dollar. This scenario, where fiat currencies lose substantial value, sets the stage for Bitcoin to emerge as a haven for institutional investors seeking to preserve their capital. Hayes points to the growing availability of U.S.-listed Bitcoin ETFs as a vehicle for these investments, suggesting that the influx of institutional capital can drive the Bitcoin price to $1 million per coin or beyond. And to bolster his argument, Hayes references historical trends and current economic statistics. The Japanese yen has seen considerable depreciation, with exchange rates moving from 115 yen per dollar early 2022 to over 130 yen per dollar in 2023. And concurrently, China's currency devaluation tactics have been well documented, with the Chinese yuan experiencing periodic declines to maintain export competitiveness. Hayes also highlights the significant inflationary pressures in the United States. As we know, money printer will continue to go. So now for the road ahead, Hayes concludes his analysis with a provocative assertion. The stabilization efforts for the yen will create conditions favorable for the Bitcoin price surge. And he also estimates that the inflows into Bitcoin driven by institutional adoption and the search for a hedge against fiat debasement can push the value to $1 million per coin. So let's freaking go. Let me know if you agree or disagree with just Blaze Arthur Hayes. And can you see the Bitcoin price action realistically smashing $1 million per coin? And if so, by when? Holla at your boy in the comments, and let's freaking go.